Hey everybody, Boris last week at Forex. Welcome to the crosses section for November 5 to November 9, 2018. And the thing that pops out on the crosses is just how powerful the yen crosses were to the breakout side last week. And generally when you have those very strong breakouts, you have to trust that the impulse move has further to go to the upside. So amongst the two things that looked good to me on the yen crosses side, Euro yen to the upside looked very, very healthy. And Aussie yen, even though there was a little bit of a correction today, still looks like an impulse move, at least towards 82s, perhaps even higher. And then last but not least, the other interesting pair that I found in the exact opposite manner is Euro-Swiss. And the reason why I found Euro-Swiss kind of interesting this week is precisely because it is in such a tight range. Generally, when you have these type of very compression ranges, these type very, very tight compressed ranges, the ability to break one end or the other end tends to be very, very important as far as directionality goes. So it's not necessarily that I like it one way or the other, but I like it if it goes one way or the other, because then I think continuity is going to be quite significant. Let's take a look at the Euro-Swiss first, because it's such a low vol idea at this point. Still very much an uptrend, still holding the higher lows, but clearly also making lower highs. And this is where I find it interesting, because this 1400, 1460, very, very tight range, a break to the downside here below 1400 really opens up the run towards at least a test of the 1300, so there's 100 points to the upside. A take out of the 1460 level on a closing basis opens up again a retest of the 1500. Now 1500 has been a pretty serious resist, but 3 times in a charm. Maybe if we close higher, the potential for further risk on flows could take us all the way through. This really would, the Euro-Swiss to the upside is a trade on some sort of assumption that the Italian situation gets diffused. I think, frankly, the trade to the downside could be the much more likely scenario given all the negative funding that we have coming out of Europe. But, you know, it may be all priced in at this point, and they, as always, Europeans always tend to have a compromise at the end just because they want to save face. So if we do have some sort of a compromise and everybody goes their separate ways, remember the critical thing is that there's worry that the Italian situation could press things so hard that it could create an existential threat to the euro itself. If they temper their differences and agree even in a 2-2 fiscal deficit, even though it's outside of purview of all the other countries, that would pacify, I think, investors and provide a really nice lift to the upside. Either way, I'm watching for the price action to tell me what the market thinks and how it's going to play out, and that hopefully will give us a signal for which way it wants to go. Now, as far as the yen crosses, here's euro yen. That looks pretty decent as a baseline here. We did fade out a little bit at the end of the day today, but still we're holding this 27.50. That's a key support here, and any further rise in yen with euro holding bid could give us a lift towards the 130. And the same story, but even stronger in my opinion. If I was going to choose a yen pair, I'd actually probably choose the Aussie yen, even though, you know, it's very well extended. But these kind of big impulse moves tend to have some continuity. Remember, this is a 1, 2, 3 base off the 79s, a big move on Thursday that took us towards the 81s. Now a little bit of consolidation. The only way this would get truly negative is, and maybe this is the way you would want to trade it with minimal amount of risk, is if we took out the 81s to the downside, if it just simply dropped all the way down and maybe got down to around 80.75, the whole structure would get very negative. You would have a lower high here and very likely maybe a return to retest of the 80s. If you want to take small risk, that's probably the way to trade it for a momentum basis. If you want to take a longer term position and be a, you know, more than a day or two holder, maybe a week holder, I think building a position here is pretty decent. I think this base is going to hold, and any kind of a dip here on a scaled down basis probably provides a very decent basis for ultimately a rally that could take us to 82, 83 on a closing basis. So whether you're a long-term or short-term trader, there is opportunities here on the crosses as you go forward. Wish you guys the best luck, the best of trading. Boris Schlossberg, over and out.